Now on to our next guest, the last presenter of the evening. We have Miyad Kasravi, who we had earlier, giving us the prediction of ZFX trading. He'll be concluding tonight. And in terms of Miyad's background, just a quick brief on him. I've worked with him previously on Trader Fest, where he shared his key insights and was really enjoyable. So it's good to have you back, Miyad. He is a professional trader with over 9 years of industry experience. His current focus lies within macroeconomics and currency markets. Miyad regularly gives recommendations on which currencies he thinks are the most promising to trade and why, sharing his insights with his growing following. Miyad will now share with us what he believes to be the inevitable market drivers to occur over 2022. So Miyad, I'm going to turn it over to you to take the dance floor.
Dynamite. Good evening. Thanks, Luke, for having me and everybody from Pepperstone who put this together. There's a lot of people involved, guys from marketing, Stephanie, yourself, obviously, and the whole team. So thanks for putting this together. It's really nice, you know. We were supposed to be down in London, but it didn't happen. Save the coin, right? Tonight I'll be talking about how I approach markets to figure out the inefficiencies. You know, the information available, everybody's got them. Everybody has got the same information. Everybody's looking at the same stuff. So what I try to do is I try to see where everybody could be maybe misstepping or mispricing stuff, and then waiting for the opportunity. So market moves in just one direction, then we can take a hold of that. What I'll be doing now, I'm going to share my screen with you, just explain a few nuances that I look at, and then I take you over to familiar charts and take it from there. I'm going to be sharing my screen now, and just let me know if you can see it fine. All good?
Yeah, I can see it. Yeah, perfect, Miyad.
Theme for tonight is how to trade 2022. Usually I have about a 5-point approach where I look at different things, how to come up with trade ideas, and that is long-term. Also, sometimes, believe it or not, I use the same approach for short-term trades throughout the week. I look at business cycle, I look at liquidity, I look at positioning, I look at sentiment, I look at technicals. And each of these have their own drivers. So for business cycle, I look at things like the yield curve, which I'll be going into more details in a minute. We look at manufacturing data and services across the globe, but mostly usually United States. Then I look at liquidity, which is central banks and credit markets. I also look at the positioning CFTC data, ETF flows, and I look at the sentiment risk on and risk off. So usually that will involve looking at the way that bonds and indices are trading. And I also look at technicals, important levels, and I look at the London fixes. So that's a sort of a major view, but let me take you over to the charts and what it all looks like on the charts and when I put them together. The chart you are looking at just now is the US yield curve, which is basically if we take the 10-year over the 2-year. I'm going to quickly demonstrate how that works. So if you're on TradingView or any charting platform for that matter, if you type in your US 10-year yields, you're going to see a chart like that. It's going to have a number attached to that will show you what the yield is for the 10-year coupon. Now, if you subtract that particular one, the 10, from the 2, which is the US O2Y, you're going to end up with a chart that looks like that. And we are right now looking at a very fascinating story because the US yield curve is currently punched below that important 0.75 level. And I look at that because it's important to me to see whether the lows hold. And it looks like they might be giving away. If they are giving away, I'm looking at levels as low as the 150s. And there's a whole lot of other currencies that correlate to that. All your pro-cyclical currencies, like your Australian dollar, like your New Zealand dollar, Canadian dollar, to some extent, and pound as well. All your yen pairs that perfectly correlate with that. So I'm going to compare this chart with the ADJPY, for instance, which is a very cyclical currency. And we're looking at a daily chart. If I were to zoom out, you can see the major moves, bottoms and the tops are perfectly aligned. Given the fact that the Fed will be raising rates the way they are, and so today Powell said every meeting is live, so every meeting they're likely to raise rates. It does make a lot of sense to see the yield curve collapse further, and AED/JPY will have nowhere else to go but lower and meet that falling global demand. And pretty much all the other yen pairs will be very similar. So what I basically look at, I look at more or less inevitable moves. Somewhere I know that there's very little in the way of changing the wheel here. The business cycle takes a lot of months to develop, and doesn't just take 1 or 2 data prints. It takes a lot of work to change this whole thing around. So another thing I'm going to be showing you tonight is how to trade it, because that's the analysis part of it, isn't it? That's pretty simple and sometimes mundane. It's nothing groundbreaking, but sometimes how to trade these things can make all the difference. So I will be taking you to a pair which I trade regularly, which is the GBUSD. And GBUSD, and across all the other across all the other FX pairs, the same thing is true as well. Every day London time, about 4 p.m. What we get something that we call the London fix. And the London fix is basically between the major banks. In the UK, they fix the prices for different FX pairs, bang on 4 o'clock London time. And these fixes, they create supply and demand levels. So for instance, the one I singled out here was your London fix on Monday. This one was the one on Tuesday, which plays a significant role when you move into important data like the FOMC. It did end up jumping, not a lot, 20 pips, because the presser was the main mover. But throughout the other sessions and last week as well, again, you can see Monday, it handled the entire week on its own, the London fix, and on Tuesday it did again create some bounces. So pay a lot of attention to the London fixes when I trade interweek. And something that's really important to keep your psyche in check is when you trade FX, is to understand when there is volatility and when there isn't any. And the way that Forex works is it tends to mean revert a lot of the times and gets trading really boring sometimes. And also it chops you out of position. So what we try to do is we try to look at the Forex calendar to see when the volatility is available, when the good moves are coming. And then you know that the volatility unlocks, and then you got a better chance of seeing your trades move into profits. Take even this week, up until now, everything was pretty boring in FX space. So from Monday to Tuesday, you can see a GBUSD, most other pairs as well, they barely move at all. And then FOMC comes in and just unleashes this volatility, and it gives the opportunity to capture these moves. And also as we roll into Thursday and Friday, you will see that market will be much more punchier, and you will see much more movement. We covered 2 things, basically how to see the big picture and what I'm expecting for the rest of the year is basically to yen pairs to move in line with yield curve, and the yield curve is headed lower. That's one of the bigger trades I'm looking at to capitalize on. And the other thing is also how to check the London fixes. It's the 4 p.m. price. You get printed on your chart. You can use that as an anchor for the following day to trade that long or short. Specifically, the Monday and Tuesday tend to hold your week. Is there any questions? Anything you wanted to cover, Luke?
Yeah, there actually are. Yeah. So what they wanted to know was, should you be more careful trading around these fixing times as a retail trader, or should you trade through that period, or should you stay away from them completely and just wait for it to wash out? What's your take on that?
So the London fix happens bang on 4 o'clock, but there is a half an hour window ahead of that time where you see a lot of orders going through, because there's loads of liquidity. So you find that market moves not necessarily in line with macroeconomic data. Because a lot of the times there might be just a need for a currency, because maybe somebody needs to make a deal, maybe a pension fund is looking to buy US bonds, and you just see prices move rapidly, specifically towards the month end. Should you stay away? No, not really, because there's volatility. That's what you need to trade. So as long as you're on the right side of things, it's all fun. It's just not fun when you lose money and you're at the receiving end of the stick. And I would encourage you to trade during it. It's just what I explained now specifically is what happens after the fix, the mop-up period. That creates a lovely supply-demand zone. You can use the following day or even for the rest of the week for that matter. And there's some certain patterns I discuss in my group. They be used for swing trades every now and then, which is this is the kind of stuff we don't want to be without.
Okay, great. The other thing I wanted to ask was that's come through is what risk reward ratio do you usually like when you're about to begin a trade position? Is there a fixed risk reward that you apply to all trades, or does it vary depending on how confident you are?
No two trades are the same. So situation dependent can stretch into bigger R's, which is nice if you get a nicer risk to reward ratio of trades. But a lot of the times, specifically if you're intraday, I look for a 1-1, sometimes 1-2 if the opportunity is there. What's important to me is make sure I capture the meat of the move. I don't try to get involved too much at the very top or the very bottom. I try to get involved when the momentum is already established and then take the most out of that. That means a lot of the times you don't get a great risk to reward ratio, sometimes 1-2. But it means a lot of the times you end up with winners and you end up with quick winners. So you don't not sit in your positions for too long. That's specifically if I'm talking about intraday trades.
Okay, great. And then lastly, Miyad, what is the trade that you have the most conviction for throughout 2022?
That's short and ADJPY.
Short ADUJPY. Okay, so you're obviously taking a bearish view on risk.
Yeah.
Okay, Miyad. Well, thank you for sharing your insightful views with us. It's been really helpful, and that basically concludes Pepperstone Talks. A very big thank you to all our speakers, and I hope all of you watching found it useful and can take something away from this. If you couldn't attend the full event or want to rewatch some sessions, don't worry, you'll receive the full replay of all sessions by email after the event. Also, if you missed our announcement earlier, we have partnered with TradingView, and we're excited that very soon we'll be offering this platform to Pepperstone clients, in addition to MT4, MT5, and CTrader. Keep your eyes on your inbox for more on this in the coming weeks. And if you would like to know more about Pepperstone or offering or want to start trading with us, please feel free to contact us directly. Our teams are available around the clock. Thanks.